Are you truly trading or are you gambling? I think a lot of traders misunderstand the difference between these two, and they also cannot master the art of trading in drawdown. A lot of you guys are struggling with strategy. A lot of you guys are also struggling with psychology. Those are two main things that make up someone's trading, okay, for the most part. And some people are struggling with one, some people are struggling with the other, some people are struggling with both, which is not a good situation. But I'm here to help you guys essentially understand the psychology aspect because maybe you do have an edge. Some people don't think they have an edge, but maybe you do have an edge over the long run. Your problem might be your psychology. No matter like how often I bash on psychology on my channel, there it comes a point where that might be the thing holding you back if nothing ever works. You might be the problem instead of the system. So you got to ask yourself when you're in drawdown periods, are you sticking to your system or are you going on tilt? So the problem with trading is your equity curve is never a 9-degree angle like this. It doesn't shoot straight up. An ideal equity curve is a 45-degree angle, not including compounding. Now, if you're compounding your account, it will look something like this where it's exponential growth, which is awesome. You can compound personal accounts, you can compound funded accounts. I think compounding personal is much more simple and straightforward than compounding a funded account because there's certain rules and limitations on a funded account that you may have to follow depending on firm to firm. But point is, there's compounding and there's linearly growing your account. I recommend compounding for the most part, especially if you're on a personal account. You should be compounding. Again, you can't be scared to compound and increase your risk. And when I say increase risk, I don't mean percent. I'm talking about just increasing your risk in terms of the money you're risking on the line. Because as your account grows, the amount of money you're risking per line, on the line, per trade, even if you're sticking to 1%, which is a standard for most trading on a personal account, it's going to be more money on the line. And you should be doing that. You should be compounding. You can grow your account much quicker. However, the problem with this is these drawdown periods. A lot of people can't psychologically handle themselves in drawdown periods. So if you can't psychologically handle yourself and you go on tilt during drawdown, you're never going to see consistent green P&L over the long run because once you go into this drawdown, you're just going to blow your account or you're going to lose a lot more than you should have sticking to your edge. So if you just stick to your edge, at some point you will come out green. You just have to let trades play out, let your system play out. Now there is some discretion in trading also in determining when to trade, when not to trade. You can call that like market conditions. That can also help with drawdown periods because when you see conditions are not favorable for your strategy, and the reason why I say your strategy is because everyone's system is different. Some people's strategy works better in consolidating markets and it kills it. Other people, it only works in trending markets. So you want to be able to learn how to identify that in real time as soon as possible when you see certain things, signatures in price that play out. But imagine your equity curve in trading more so like the market. The market is based on math. And if it's based on math, think of that just like your equity curve. Your equity curve is also based on math principles. And in math, just like the market, your equity curve, there's always going to be mitigation phases or what I call pullbacks, right? It's not a straight line like I said. I think too many people, too many of you guys are having unrealistic expectations about trading because you see people winning all the time and never losing. No one ever doesn't lose. No one ever doesn't go in drawdown periods, but people go on different lengths in their drawdown period. For example, some people may only be in drawdown for a week, max. Then this is based on your backtesting data as well as your live trading because emotions will prolong that drawdown period. If you go on tilt, your drawdown period can last much longer than it should be. So that's something you really want to keep in mind when you're trading. Make sure you're in the moment when you're trading, right? Be present in the moment. When you go on tilt, you should immediately identify that and snap out of it because otherwise you're never going to be consistent and the system might not be the issue anymore. You might actually have an edge. Some of you guys will actually already have an edge and you've proven it in backtesting, but then you see your live trading results are not the same as your edge, which some people bring up to me. They ask me, why is this? Well, it's most likely, the only reason actually is really your psychology. And some people think of psychology as revenge trading, tilting, over leveraging, but that's just not all psychology. There's also understanding when to trade and when not to trade. When you're backtesting, you can play price free slow and you can be a lot more selective. I think when people live trade, they force trades. You know a trade is a B setup or a B plus setup, but you're still forcing a lot of these trades when you're live trading. However, you notice in your backtesting, you're not actually forcing a lot of these bad trades, bad B trades. And so that causes a huge distinction between your backtesting data and your live trading data. So it's not just about over leveraging, risk management, taking random trades. You might not be taking random trades. You're just taking low quality trades when you're live trading because you want to be in the markets. You don't want to be staring at the chart and doing nothing. But you have to understand trading is not about time that you put in. It's about decisions that you make during that time frame. So make high quality, good decisions that match what you did in backtesting, not trades that you know from your backtesting data are not good trades and you still take them. Of course, your equity curve is not going to be green live trading if you're not sticking to what you did in your backtesting. Some of you guys think you are, but you're actually not. So make sure you have a live trading journal, going through each trade, make sure you're accountable, and you can even get like a trading partner if you want. You can join the group, whatever, make your own group, for your own friend group, or join a free Discord server, maybe find some buddies in there in the ETU group and hold each other accountable. That's going to help you out a lot when it comes to figuring out the distinction and difference between your live trading and backtesting data. Again, like I said, some of you guys already have an edge, but you tilt when you go on drawdown. So you never ever have a green equity curve like this because you tilt here. And so instead of doing this, red curve does this. You start over leveraging, revenge trading, and it's downhill from there. Bad decisions in terms of emotions and technical decisions compound much harder than good decisions in trading. Losses have a 2 times or greater impact on your psychology or mental than winning trades. So when you're on a losing streak, it hurts 2 times statistically more than when you're on a winning streak. You guys can even look this up. I believe it is 2 times greater. You can look at there's a statistic online about someone doing research on psychology and the effect of losing versus winning. And I don't think it just applies to trading. It applies to everything else. Basketball games, football games, sports games, athletes, they all have to deal with drawdown. No team has, okay, I won't say no team, but most teams don't have a perfect record throughout the whole season. They're going to have periods where they are on losing streaks. Same with trading, same with how the market moves. Just imagine your equity curve is the market because it moves just like the market. That's the truth. This is not realistic, okay? This is somewhat realistic depending on how good your system is. Again, if you compound, that's what it looks like, but nothing goes up like this. You guys are expecting trading to be, once you unlock the aha moment, to be like this. No, it's not. You got to learn how to trade through drawdown. If you can master your psychology and be able to stick to taking good quality trades during drawdown, you're going to be banking, okay? You're going to be banking as long as you have an edge. I'm going to give up a certain statistic from actually one of my students. He was in major drawdown. He was on a pretty big losing streak, but he was able to come out of that losing streak by sticking to his system, and he was able to focus on just taking A+ setups, and eventually that A+ setup hit for a massive, I believe it was 18 risk reward, if I remember correctly, and he was able to request a massive payout. Again, this varies from person to person, but everyone should be sticking to their system through drawdown. As long as you have a tested edge, you should be sticking through your drawdown. Otherwise, I can give you an amazing strategy or any system, and you're never gonna be able to make it because you blow your account during this drawdown period. You might get lucky here. Maybe your system performs well for 2 weeks, and then you blow your account because you can't stick through drawdown. This is a no-no here, right? If you can stick to your system through drawdown, you will get payouts that you deserve. Hope you guys do enjoy today's little video going over basically understanding and having realistic expectations when it comes to become a profit trader on your equity curve. It's not 9 degrees, okay? You're gonna have drawdown periods. If you can learn to master these drawdown periods, like I said in today's video, you're gonna come out a much better trader. Again, every single day that you become 1% better and improve your psychology and mental edge, it's not just a technical edge, but also your mental edge, your mental sharpness. You will basically build up something like a wall in a sense where you build good habits, and with positive reinforcement that you can even add to those habits, like rewarding yourself, for example, whenever you get your payout or whenever you stick through this drawdown and come out green, that itself is positive reinforcement. And the reason why is because every time you guys are going in drawdown, you go in tilt, you're giving yourself negative reinforcement because you see how when you tilt, you're going negative. But if you stick to your system and find yourself continuously coming out green at some point, you don't know how many losses in a row, but at some point you come out green, this gives you positive reinforcement because you realize every time I stick to the edge, I come out green. So the more you practice this, the more confidence you build in this, the more results you see live, your confidence is going to skyrocket in trading, and these drawdown periods are going to be like nothing to you, okay? Because you're going to stick through it every single time. Especially if you're trading a personal account, you need to master drawdown periods. It's not the same as a platform account where you can blow it and get another one. You cannot get another personal account per se. You're going to lose all your money in there, right? And you can't even lose all your money anyway with proper risk management, 1% per trade. I will talk about risk management in another video, but hope you guys do enjoy today's little video going over basically handling yourself as a trader during drawdown and how this is a mental edge you need to be mastering and practicing every single day. Next time you're on the charts, make sure to practice this, even record yourself trading. It's going to help you out a lot, trust me. Hope you guys do enjoy today's video. Join the free Discord server if you want to find like-minded traders to even hold each other accountable. Find an accountability partner, that'd be amazing. If you want to learn more from me directly, you can apply down below for a one-on-one prime mentorship. I have one spot open currently, and I'll see you guys next video. Peace.